Anisha, thanks so much for taking us through that. Now, with the election outcome in the forefront and largely priced in policy continuity, which will foreign investors start parking their funds back into India again? And also, what's next for the market after the polls? Hear out opinions from the biggest voices, the likes of Nilesh Shah, Sandeep Tandon, Porinju Veliat, as well as Manish Dangi on what they had to say.
The global investors, I think it's going to be impossible for them now to ignore India, not just as emerging market allocation, but essentially to be a mainstream market where they make substantially higher allocations, because obviously they have been apprehensive about continuity of policy for the next 5 years. Here now what you have is essentially a continuity, stability, and maybe a turbocharged policy calendar for the next 5 years. And I think that's what they basically would be looking forward to.
India P multiple will expand further. A lot of FIIs have exited India, highlighting that India has been very expensive related to other emerging market. I think they will be forced to come back. Okay, and I'm using the very strong word. They will be forced to come back when they see this outperformance continue and the P expansion. They themselves, their inflows will actually further increase the P multiple of this overall India as a basket.
The short position of FIIs, we should not give too much importance, except for the very short term, there could be some covering. But anyway, it's only minuscule of their total holding in India, bet on India in the equities. So that way, I think they also will be happy for the market going up. So need not worry about FIIs, I feel.
Return of Modi actually is absolutely loved by bonds, because it sort of assures that this small risk of high fiscal deficit and potentially very high inflation has gone. Modi regime's policy have ensured that even in a growth such as what we are experiencing right now, core inflation is below 4%. So you would see more of it over the next few years. That means a sort of legitimately a secular and rather very big bull market can happen in bond markets over the next 3, 4, 5 years.
Short-term players will indulge in profit booking. I mean, as they say that buy on rumor, sell on news. So today is essentially the day when the markets are reflecting the exit polls. Tomorrow is 24 hours from now. We will essentially have visible trends in terms of which way the verdict is flowing. I don't think anybody has doubts about which way this verdict is going. But it's very likely that you might see some profit booking happen because that's essentially the kind of nature of business in which short-term players are in. But long-term players, I still think they will continue to kind of come in. And clearly, when you take a 3 to 5 year perspective, markets essentially are not expensive. Markets are reasonable. There will be pockets of where valuations are way more attractive. And that's where money will flow in.
It's going to be a very interesting time ahead. There will be a lot of volatility. At the same time, for the long-term investors, see the long-term trajectory for India's economy and Indian stock market. It's very clear. It is very bullish. Equity will continue to be the best asset class. Indian equities, if you see any asset class in the whole world, not only in India. So that way, there is going to be, more and more fancy for Indian stocks. I expect more and more FII inflow into the market in the coming years.
That was a verdict coming in from.
If you like this video, then like, share and subscribe to ET Now.